Hello traders, Gary Wagner here. It is 12:20 in Honolulu, 5:20 in New York on Tuesday, 28th day of January 2025, and this is the evening report for gold and silver. Gold futures mounted a strong recovery today, climbing $29.10. That's a net gain of 1.06%. taking the February contract to $2,767.50, effectively erasing the vast majority of yesterday's dramatic decline. The precious metals resilience was particularly noteworthy as it gained ground despite a strengthening dollar, which rose by 0.45%, taking the index to 107.906. If you recall from yesterday's show, we looked at the $30+ sell-off that occurred yesterday and postulated whether or not this strong sell-off was signaling the beginning of a correction or a one and done, a one-off, so to speak, which will occur during a rally unless a market is parabolic, which is why we looked at different rallies throughout 2023 to get a sense or a feel for the average price move and time distance of a rally. And what we concluded was that the majority of rallies we witnessed last year, and of course that was an exceedingly bullish year for gold, as I believe this year will also be, the rallies would typically move gold about 15% higher. That's a $300 move to maybe $450 higher, a 20% gain, which is a exceedingly strong rally. And we concluded that it is most likely that what we witnessed yesterday with the $30 sell-off was in fact a one-off. It was due to outside factors, specifically a startup Chinese AI company that had duplicated the work of OpenAI's and Google's large language models for pennies on the dollar in terms of costs, which resulted in a major meltdown in U.S. equities. The indexes as a whole lost ground, and NVIDIA shares tumbled by 17%, which was the largest single-day drop since March of 2020. However, it was our belief that based on all of the other factors that are currently at play in gold that took gold substantially higher from $2,000 to $2,800 in approximately 1 year, when added to the fact that we now have a new administration with aggressive stance on many issues, such as immigration, tariffs, and other factors that have ratcheted up the uncertainty factor, will inevitably result in more interest to adding gold to one's portfolio and take gold substantially higher. While it is one thing to project that gold will trade as high as $2,900 or $3,000 by the end of this year, how we actually get there will be another story, and in fact become more difficult if and when gold breaks above the former all-time record high at $1,824. We will continue to use our technical system, which combines three distinct methodologies: Elliott wave theory, candlesticks, and Fibonacci extensions and retracements, combined with other Western technical studies, as well as the underlying fundamentals that are moving a market to guide us. The key right now will be to look for weakness as this rally takes gold higher. And once we do have our wave 1 completed and we go into our corrective wave 2, we have a whole toolbox of additional tools to forecast the extent of the correction of wave 2 and the distance we should see wave 3, 4, and 5 move to get us to our current year-end target of around $3,000. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.